So I'd actually just like to make a correction on what I said before. If I entered at the lows of the 4 hour first presented gap, then I said I would have been stopped out. But what I meant was the sell side raid, not the low of the gap. So in the previous trade, I had my stop at the low of the gap. I don't know. That's just how it made sense to me. So what I meant was anything below that 4 hour first presented gap, entry of a sell side run would have been more beneficial and more efficient than entering at the gap. And so this is something that I've been studying. Once again, you can see that now I'm entered at the high of the gap, trying and thinking that I've set myself up for a good position, that the market should not return back down into that weekly first presented gap. It does eventually respect it, but it does go down and jab into that upper quadrant right where my stop is. So that's kind of what I am talking about when I am saying, rather than entering inside the gap, whether it be the high, whether it be the midpoint or the low, it's better to enter on the break of sell side and turtle soup long enter, and then that. Yeah, so basically at this point I have my chart pulled up, and I'm just going to talk about what would have been a better entry on this trade, and for next time I can key up on that. So eventually price did trade up higher. We did use that daily first presented gap for July 2nd, respected the upper quadrant, and I wanted to see that weekly first presented gap for that 6:10 p.m. candle. So that's a 1 minute candle, and that's the first presented gap for the beginning of the week. And so basically what I was saying was that rather than entering inside that gap, it would be more efficient and better to enter on the sell side raid below that gap. So the sell side raid, or the stop run that occurs below that gap, placing a limit order there and then having your stop 5 handles below would be much more efficient. You would have a better gearing for a stop, and not that this is important, but it's always a plus, is that you would have more room for profits. So take that 12:11 p.m. low, so that's the nearest short-term low below the 4 hour first presented gap. So it's a risk obviously you have to take to sell below, or to buy below that gap. What am I saying? To buy below that low, but in terms of probabilities, it is actually more probable that you get a better entry and see profits. And so in this example, we did eventually run out that 12:11 p.m. low at 6,273, so 6,273, and then assuming that we entered right at that low or even a tick above, so 62.73 and a quarter. So let's just say right at that Wednesday midnight opening price. Let's say we entered there and set our stop 5 handles below. The stop would be at 62.68 and a quarter, and you can see that that was just about 2 handles below the weekly first presentation fair value gap at 6:10 p.m. So this trade never actually got stopped out with that hypothetical trade, but because I entered at the high of the gap, and because I was rushing the trade at the moment, I was thinking I was getting a really good entry, and drawdown is a dangerous thing. So even though the trade direction was right, because I was rushing entries, because I was forcing a setup, I was thinking to myself that, okay, it's gonna trade above that gap, it's gonna come back down, bump the high, and it's going to run that buy side liquidity. It did not do so until we had a sell side raid below the, what is that? Below the 4 hour first presented. My God, the 4 hour first presentation fair value gap at 2 a.m. So that is on the July 14th, 2025 candle. So, anyways, these trade recordings are good, but I feel like it doesn't get the point across I want on YouTube. So, an issue that I've kind of been facing in just the whole content creation journey is after this I have to go and log all my personal trades and then put journal entries for them and enter the stop, enter the limit, and then break it down myself and see where did I go wrong. Where obviously I'm including more personal things, but not everything is personal. Obviously, in that there's obviously price action related stuff, and I would like to share it, but the problem is I obviously can't do that on YouTube Shorts. So right here is basically just me talking about the actual trade and what I'm thinking in real time, which we all know is not going to be directly translated unless I was doing this live, or I had a voiceover, like a live voiceover. So I'm not, or I am aware of that, but I'm trying the best I can. Anyways, at this point, I'm just really grabbing on for any signs of a reversal, but because my entry was just so poor, it doesn't run it. So, or it does run the stop. So there it is. It's trading down, lower. We're on a 15-second chart, and it trades into that the high of that gap for the week, the first presented weekly candle 1 minute gap, and then it bumps a little higher, comes back into the 4 hour gap, and then eventually does run it. That stop at 62.7150, and it just trades one tick below it, and then from there reverses higher and creates a new high of day. So like I said, right direction, wrong execution. And so these are the days for me that create tilt on the same very day, but typically I'm pretty good going forward, especially when I recap the trades. But overall today we had a 33% win rate, 15 total trades, 5 winners, 10 losers. So nothing really exciting. It's just trading back and forth. I am just waiting for it at this point in real time to start trading higher. Looking at the daily chart, looking at the 4-hour chart, 1 hour and 15 minute. I'm thinking to myself that yeah, this thing is going to trade higher, but because of the conditions, I just got caught up in the conditions. So you can see right now, right as soon as it trades down below that low, it also runs that stop by 1 tick. There we go.